Hi everyone. I'll be explaining a very simple premium and discount approach to trading the financial market. So we all are already familiar with understanding basic market structure and how price pulls back into discounts for a buy and how price pulls back into premium for a sell. So and I know that majority of us have problem in knowing the point of interest to make use of within your premium for a sell or the point of interest to make use of within your discount for a buy. So what I'm going to explain to you right now will solve let's say like 80% of your problem concerning that. So ride with me. First thing first, I'll be making a simple diagram that shows how it actually works. So I'm making a simple diagram that shows how it actually works. Um, let's say we have a swing point like this. We have a low, we have a high. So and price starts retracing. So this is what we want to see. If you have gone through the market structure video that I made, I explained something about premium and discounts. We expect price to come below this level, right? This is the place you're expecting market to come below for us to start a buy, right? So now we want to take advantage of this idea. If you don't have this gam box setting, you can put it on. We have 0, 0.38, 0.5 and 0.62 and 1. So basically what we want to do is that once price retraces into discounts and price lands into this 0.62, you just want to wait for a simple change of character right here. So once price breaks a lower high right here, all you just need to do, you don't need to bother yourself again. Just place your order on that same level, on this same 0.62 level, right? So this is what you are doing, buying on this same 0.62 level. But if we have something like this, let's say price taps this and the break happened right here. Let's say the break traveled a little bit far off right here. I can decide to take my buy on this same 0.5 level instead of 0.6 level. So it's actually your choice, and probably if you backtest, you know when to make use of 0.62 and when to make use of 0.5, right? But all in all, you are not bothered about marking other block, marking all of that again. All you just need to do is place your order on that same line once price gets a shift, right? So not to waste much of our time, I'll be going straight to the charts to show you how it actually works, right? So basically premium and discount, swing high, swing low, right? I won't be talking much on you identifying swing high and swing low right here. I just want you to get the major logic of this. If you don't know how to identify swing high and swing low, you can go back to the market structure video on the Telegram channel. So in essence, we have this swing high right here, breaking structure. So using the idea that I just talked about, your prime and discount to from this swing high right to this swing low. So what are we looking out for? Take a look at this structure. Higher high, higher low, higher high, higher low, higher high, higher low. So once you get this shift, just place your order on that same premium line. On that same premium line. And put your take profits. It is that simple. But if you are placing your order on this 0.5, like I said, you can use 0.5 for this same premium line. So if you are placing your order on this, just make sure that you are covering that high. But if you want a better risk to reward ratio, you can always make use of this same one here. So if I'm doing this, that means I'll be covering this high. You can see the difference. So that is basically it. So we can go on and on with more examples. So let's take for instance, we have this from this swing high down to this swing low. So in this case, what do we have? We have low high low high low high. So here we have this change of character right here. Like I said, you can place your order on this or place your order on this. So in this case, assuming you place the order on this, you have missed entry, fine. And if you placed it here, you are in the trade, fine. So your back test, from your back testing, you know the one that favors you the most between the two. So I won't give you extra detail around that. You figure out that yourself. So you have another break of structure here, right? So all you just have to do, your premium and discounts, right, from this low to this high. So this case, we have this low, this high, this low, this high. Now there is something you need to pay attention to here. Look at this change of character. It never happened with body close. You should always pay attention to this, like ensure it is breaking with body, because most of the time those ones that breaks with wick, you will see price going lower, even lower than this low. So ensure that it breaks with body. So now at the end of the day, you notice that everything eventually broke with body right here. So you just place your order on that same level here. Once price pulls back, take your profit. So same thing here. We have break of structure right here. Premium and discount from this low to this high. What are we doing? Follow the market structure shift again. We have a low, a high, a low, a high. So what did price do? Price broke here. That's a simple change of character. So what are we doing? This same discount. Place your order, place your TP. So it is that simple. I can go on and on and on. Just make sure you are making use of your time frame for it. Most preferably, maybe like 30 minutes and above. So you didn't need too much. You have a break of structure right here. This is another one. A break of structure to the downside right here. So what are we doing? Once price gets a market structure shift or change of character, so you place your order directly on this. You can see this one missed the entry. It's just a very, very little pip, but that's fine. There's nothing 100%. We have a swing high, swing low, break of structure from this high to this low. So what are we doing? The same thing over and over again. Low, high, low, high, low. What are we doing? You want price to break it with body. We are not counting this one. You can see this one is just breaking with wick. So this is the one we are counting. Breaking with body. What are we doing? That same level. Don't forget, that same level. So that same level, which is this. You can see there was immediate retest of that same level after breaking with body. Put your SL right above. Target the low. So target the low. So you can see price formed another one right here. We have this major break, swing high, swing low, right? So for this, when price got to this premium, we got this break, but price could not pull back to this high before getting to the external. That's fine. Some actually happens like that. So that's that concerning that. You can just try to go through your chart and see more examples for yourself. We have this break of structure from this low to this high. So the market structure shifts happened quite quite late, so we could not get a nice entry right here. So you will only see how powerful it is when you backtest yourself. So I will leave you to do that for this as well. Break of structure, prime and discounts from this low to this high. If you don't know how to understand swing low to swing high, rewatch the market structure video, that will give you clarity. So what do we have here? We have internal structure, low, high, low, high, low, high, low. So this is where we got the change of character. So on that same level, buying, your stop loss just below the low and take profit target. And if you know your stop loss is kind of too big for you, you can always wait for a new break. Swing low, swing high, the same thing. Swing low, swing high, the same thing. Just prime and discount. We have a major break right here. Swing low, swing high. This one would have missed the entry. After the change of character, it was unable to pull back. Like I said, try to go through that video to understand swing low and swing high, basic market structure. Swing high, swing low. We have a break here, then entry, stop loss, target. So these are very, very simple stuff to work with if you pay attention. Swing high, swing low, premium, discount. What are we doing? Basic market structure. When price tapped into it, it was not broken here. Went into it again, not broken yet. So eventually, price broke it here. What are you doing? On that same premium line, you're placing your order. Stop loss right above. Target external. Simple stuff. Same thing here. Even if you want to re-enter, swing high, swing low, premium, discounts. When price tapped into it, there was no internal structure. Probably you could go to like 15 minutes time frame to get internal structure break. But most of the time, for those ones that will work very well, each one will give you the detail you want without any stress. So as you can see, this current move on EU, we have this swing high to swing low, swing high to swing low. Price did not get to that level, that's fine. So it happens. So the only challenge you might have in something like this is you understanding your market structure very well. So far you understand your market structure very well and you follow the rule, you are good to go. Let's check one more pair before we end it. So I think I would probably go for crypto pair. So this is BTC USD. This is BTC USD. So swing high, swing low, same thing over and over again. Understand your swing high, swing low properly. So for this, we have a break, swing low, swing high. So what are you doing? Once you have this internal structure break, on that same level, you are buying. On that same discount level, you are buying. Take profit targets. Simple as that. You can see I've not been marking liquidity, marking all of that. This is a very, very simple approach and it has worked over and over again. I don't give you rubbish. Just have to take your time and back test. So if this is a swing high and this is a swing low, you can see nothing is actually perfect here. You got this change of character, but price was unable to respect it. That's fine. You have a swing high, a swing low. Price missed entry here because after this tap and this break, you are waiting for price to get to this. Unless you are able to get in with this level, but this one would be giving you a bigger stop loss. Everything that has advantage has advantage. So this one will be giving you a bigger stop loss and a smaller risk to reward, but this one will be giving you a smaller stop loss and a wider risk to reward. That is the difference. So you can go to your chart and back test yourself as well. You know, the more you back test, the more you get confident in what you are doing. You have a swing high and a swing low. Swing high and a swing low. So when price got there, we had this market structure shift here or change of character. Price missed it slightly. In cases like this whereby price miss your entry and get to the target, just cancel the order. You don't need it again. Instead, once price starts pulling back, you have another trading range. You have another swing high, swing low. And also, take note, when you're having a swing high, swing low, ensure that, let's say you have a swing high and a swing low, ensure that you are breaking the swing high with body closure, not that price is wicking above the swing high. So that's very important. So for this now, you have this major break here, swing high, swing low. So what are you doing? Internal, high, low, high, low, high, low, high, low, high. Once you get this break, simple, place your order on that same level. Stop loss above, take profits. So that's that about that. Just drop your comment if you got value, and don't forget to subscribe and do well to share the video as well. Let's populate the channel.